Have you ever looked at your profit and wonder why your cash isn't saying the same thing? Have you looked at your net income on your tax return and you seemingly have profit, but you also have a tax bill and you're looking like, okay, somebody's lying because where is that in my account? You're seemingly profitable, but you're continuously running into depleted or nearly depleted cash, and you seem to be borrowing money from all different avenues. You pay off your debt only to use it the next month for your typical expenses. Now imagine this. You know exactly how cash flows into your business, and you're no longer using your credit card as an emergency fund, but leveraging it for cashback income and points, okay? You know exactly how everything's supposed to be coming into your business, and you're aware of all the cash that goes out in your business, so you feel empowered and confident on how you can improve it. Today, I'm going to teach you that profit is not the same as cash, not the same as cash flow, and I'll teach you exactly how cash flows in your business. Stay tuned. This is the Harmonious Wealth Podcast, where we're breaking online business owners free from chasing every next revenue milestone and instead prioritizing lifestyle and legacy goals so you can finally have the personal wealth to show for your business success. I'm your host, Iyanna Vaughn, fractional CFO and bookkeeper, here to guide you. Now let's start building your financial legacy. Hey, welcome to episode 6 of the Harmonious Wealth Podcast with your host, Iyanna Vaughn. So in episode 1, I talked about how revenue doesn't matter if you're not having the cash on hand or the personal wealth to show for it. And when it comes to profit in your business, usually that's a surprise during tax season or at the end of the year, along with a tax surprise when it's time to do your taxes in April. Now, even if you're looking at your profit on a quarterly or monthly basis, I highly recommend monthly, you're kind of disheartened because your cash typically or may look different from your profit. You wonder why cash is no way near what your profit is looking like when you do have those profitable months, and you might be depleting it and mismanaging your cash. I've been there. So the short version before we go into a deep dive, I will have some visual aids for you, is profit is income retained after your expenses. So we have revenue minus expenses equals profit. Cash flow is the journey in which cash flows into your business and out of your business. And then it has like the riverbank of like what's left over for cash on hand. I want to share how all these look for you. If you've been wondering, okay, why is my cash different than my profit? How do I determine how cash flows in my business? This is for you. So I know what you want. You want a comprehensive financial strategy in your business so that you can be more proactive, so that you understand that what you're looking at is accurate and you can assess how it communicates your company's financial health, right? Simply, you just want to know what you're looking at in your financial reports are accurate and understand how it works so that you can better improve it. When we work with our clients, we help them create a financial system where every dollar has a place, purpose, and function. And you might not have that yet because you're guessing, right? You might have like one report, which is the income statement where you look at your profit, but you don't understand the different reports that you should be getting every month. So it's like you just going off of intuition and feeling like, okay, I know I need something different or something more comprehensive, but I don't necessarily know what it is. So you want a financial system to have a place for every single dollar is because you aren't seeing the cash grow and you're not able to pay yourself consistently and well every single month. So with our clients, we help them keep a pulse of like cash on hand for both their business and personal so that they can stay loyal to an automated system for cash flow on things like a tool like Profit First so that they're not avoiding looking at their money. I want to help you have harmony between your personal and business financials. So we have a 4-step framework that we have with our clients, and that includes the first is creating a legacy plan. So we sit with our clients, we help them unpack what their immediate lifestyle goals are, as well as their legacy goals. So like, what would their life look like at 60? What would they want to retire with? How can their business be the number one or one that's one of the top vehicles to make that happen? Then we assess trends. So assessing trends to me is like, we're looking at the financial reports and you're getting educated on what transpired. And then in the third step, we're highlighting gaps so that we can improve the gap between where you are now and where you want to be. During the first part of our framework, we create a personal spending plan that goes through your bills every month. We want to make sure that we uncover exactly what you need to be paying yourself, and we have a goal for you to live off of 50% of your take-home pay. Then we will be able to highlight the gap of like, okay, immediately, what is stopping you from being able to pay yourself what you need every single month? And then we go into how do we plan for the next 3 years to get you closer to your legacy goal. After we highlight those gaps, we're able to plan for profit. So after planning for profit, you're able to see how your business has been growing throughout the quarter, throughout the years, and then we kind of recalibrate every single year to just make sure your legacy plan is where it needs to be. Now to the meat and potatoes of this episode. So I'm going to have a visual aid. First, I want to talk about profit. So with profit, you typically see, people sharing their revenue versus what they make in profit. No shade, that is fine. However, it does not give you a reality of what to expect for profit in your business because you don't know like the typical guidelines of what you should be spending here, where should your investments be, and how to know that you are doing the right thing, right? Because when I think of larger companies, they are public, right? So you can see their financial reports publicly, whereas with small business owners, of course, we're not sharing all of our financial data. So you don't have a benchmark in knowing like what's actually right or wrong for what you're doing in your business. Along with not talking about profit, we don't talk about cash flow when it comes to like an online business space. The biggest thing is talking about how to improve your revenue alone, where there are other areas in your business that we need to see that improvement. So while profit absolutely impacts your cash flow and cash on hand, that's not the end all be all because there's things that you need to do in all areas of your business to see improvements. I talk about why you're making multi six figures or you're making great revenue in your business, but not seeing the cash on hand in episodes 2 and 3. So if you do have some issues on how you're maintaining your cash on a mindset level, definitely check out episodes 2 and 3. Improving your profit is like an art, and I like to start that art piece by understanding what your take-home pay must be so that you can live and thrive versus just surviving. So a rule of thumb for me, again, is living off of 50% of your take-home pay so that you can use the other 50% for savings, investments, retirement, and thriving. Like say, if you want to get your nails done, massage, all that, because you're living off of half of your take-home pay, you have the flexibility to have the lifestyle that you would desire, of course, without overconsumption, and create a better future for yourself. So once we have that ideal take-home pay, we have a baseline for where you should be with revenue. After we get a baseline and we know what your take-home pay must be, and we have a baseline for your revenue, I like to say, okay, our North Star is to have your profit be at 50% before paying yourself. 50% profit margin will help you then create a plan to pay yourself what you desire, and then also implement some tax strategies that might have a little bit of cash implemented in those, but you're able to dictate what your tax liability should look like, right? So I'm going to show you a visual because when it goes into like revenue minus direct costs equals gross profit minus operating expenses equals operating profit, I do want to give you that visual. So let me pull that up right now. So first up is revenue. So we have income stream 1, 2, and 3. Then we get total income or total revenue. Whatever you name it, that's fine. And then the direct costs. So direct costs directly relate to revenue. So if you are a service provider, it'll be your delivery team, so subcontractors, and also like any specific expenses that relate to the project. So if you're an event planner, it'll be your event assistants, as well as like any event expenses that directly relate to the project of that event. And then if you're a designer, it'll be like your designers, right? And any like graphics that you purchase to complete the project, that's a direct cost. And then if you're a product-based business owner, it'll be like your cost of goods sold, like your inventory. And then once that inventory is sold, now it's a cost of goods sold, as well as like shipping and things like that. So think about like what is an expense that is directly tied to me generating revenue. That's a direct cost. You want to ensure that each project is at least 70% of revenue. So say, for instance, for this business, their subcontractor, maybe it's like one person, maybe it's one contractor getting $3,000 a month. And that's just under 13% of their business. Maybe they have the different revenue streams, which helps them improve their profit because they have different streams of income. And then we have transaction fees. To me, that's a direct cost because the merchant fees that directly relate to you getting sales is a direct cost. So we have gross profit. So gross profit is at 84. So that checks off the box of being over 70% of revenue. Then we have operating activities. So no matter what happens in your business, whether or not you make revenue, you're going to have operating expenses and overhead, right? So we have software. So we said no more than 5%. We're at less than 3%. That's great. And then we have some professional fees. Maybe they did some coaching, anything else, phone, internet, just all these basic things. I just kind of put numbers down. And operating expenses were at 28.8. And let's look at the operating revenue. I didn't have that here. I'm going to do this divided by this number, and that's 55. So yeah, we're at 55% before we consider the owner's pay. So that is it for the screen share for right now. I'm going to show it again when I talk about cash flow. Hopefully this works when we getting back. Okay. So we talked about profit, right? Next up, we're talking about cash flow. So cash flow is like how the business, where you start in cash. So the riverbank at top, the Nile River comes down, and then the riverbank at the end, like the cash on hand at the end of the day. Most people think their profit is their cash flow. They should have that in cash on hand, but that's not true, right? They might think, oh, I'm saving cash by using debt or using a credit card. That could be true, but then you also have a bill to pay that card that next month. My approach with cash flow is to simplify as much as possible, right? All cash that comes in minus all cash that comes out is your net cash change, and that produces your cash on hand. So income in cash is going to be your revenue that comes in, your sales, not by creating new invoices, right? Is by the cash collected. And it could be some passive income sources like your interest income from having a high yield savings account. And then it could be like your cashback income. Like say if you use your points just to kind of get cash back, that could be like a passive income source. You also have what you contribute to your business. So the opposite of owner's draw is owner's contribution. So you're paying from your personal to your business and you're contributing to your business. That's cash coming in. And then if you have like a grant or a loan, then that's also cash coming into your business, right? Outgoing cash is, of course, your expenses, which you pay yourself an owner's draw, estimated taxes, tax debt, things of that nature. Outgoing cash also includes like you paying off your loan or other debts, and then your credit card payments, which can be a little cloudy, right? Because if you're spending a high ticket item on your credit card and that saved you for that month, but if you have something like Amex Platinum card and you have to just pay it off the next month, it's going to interrupt your cash on hand that next month. So I'm going to show you a visual aid of like what cash on hand is. Okay, so here is cash flow. I made it similar to the income statement that we just looked at, but it's a little bit different. So first we have the beginning balance, right? This is the beginning balance of cash on hand for a company. And then we have all cash that came in. This one, I just made it seem as if it was just $20K straight up. And then I have like after your transaction fees, like what Stripe transfers to you. So I kind of made it like a little uneven just to make a visual so that you're not thinking exactly what you made in sales is exactly what's going to come in your bank, because there could be transaction fees that you might incur. And then other cash coming in. So there was no loans for this month for this particular client. And then there were no owner's contribution. So it's at zero. So total cash in was just revenue. And then we have your operating expenses, everything that we saw in the last report is what we have here. So we have operating activities, $9,710. And then what I did here was do like a tax estimate of 15% of the revenue if we're doing profit first, just as a visual sake. So to me, this cash on hand is technically like you're paying estimated taxes, right? So $3,400, almost $3,500 got taken out of the business. And then we have your owner's distribution. And then we have a credit card payment. And then we have total cash out. So all the cash that came in, which was 23,000 minus all the cash that came out was 19,000, almost 900, was at a net of 33.97.83 cents. So we see profit, right, is not the same as ending cash on hand because there were things that happened outside of the income statement that contributed to the cash changing. I hope this helps. Let me know in the comments if it does, if you're watching on the YouTube version. Okay, so we know that improving your profits, right, has the chance or capability to improve your cash flow. And the more cash that you retain, the more cash that you have to leverage and invest for your future. So again, if you only look at the income statement or profit and loss statement, you're only looking at one section of your business. You also need to look at your balance sheet, which shows your assets, what you own, liabilities, what you owe, and equity, which is left over. And then you have your statement of cash flows. So it doesn't look like what we just showed you, but what I just showed you is exactly how cash flows in your business. So you want to be able to say, okay, I received my report. I'm able to understand everything that's going on. I'm looking at my bank account every single day and I don't feel any angst because I know exactly what's going on. You're able to pay yourself exactly what you need so that you can have your weekly massages, your bi-weekly nails getting done because you're paying yourself what you need. And then you're also strategically increasing your profit so that you can have like savings, right? The last bit is cash on hand. And I'm going to go a little bit deeper into the profit focus. So you might avoid looking at your cash on hand or your bank account because you don't want that negative energy, because you don't like what you're going to see. So when you have that mindset of not wanting to look at your numbers, you're not going to change your habit. And then it's going to perpetually put you in a place of wanting to run away from the truth when you should be running towards that truth so that you can face it, even if it doesn't feel comfortable. So my approach into helping increase your cash on hand is the profit focus, and I'll get into this deeper. So the first focus is fixing your cash on hand. The elephant in the room is we don't have enough cash on hand, and I want you to be able to handle the little that you have really well so that when you have more, you're able to not self-sabotage yourself. So what we do with our clients, we create a 12-month weekly cash flow forecast. So as of today, we're going to look 52 weeks in advance and see, based on where you are right now, what cash on hand should look like. Based on your monthly recurring revenue, your launches, and your typical expenses, and what you need to pay yourself, this is what your cash on hand should look like every single week. And I want to look at 24 weeks or 6 months in advance so that we don't have any surprises. So with our clients, we work on a new zero based on their habits, where they are as a company, and we kind of incrementally grow it. So I typically, like, our North Star is to have our zero at 1 month of expenses, but we're going to gradually get up to that, right? Like if you're consistently having 1,000 flow in your business on a weekly basis, I'm not going to say, let's make sure we get 10K. We could get there, but that's not going to be an overnight fix. So once we have a new zero for your account, we're going to ensure for the next 24 weeks, ideally for the whole year, there are no negative balances. And if there are like chances where it could be negative or low or your new zero, we're going to say, okay, you need to make X amount, or you need to consider investing on this expense on a particular week so that you can maintain healthy cash flow throughout the months. And a bonus is, I always tell my clients, let's open a high yield savings account so that you can earn interest income holding your money in an account versus like in a regular checking account, you're getting nothing. The second focus is fixing your business debt. So once you have your cash on hand where it needs to be, then you have money to be able to get aggressive on your business debt. So nothing heartens me more when you're thinking that you have that cash on hand or you have enough cash to pay off your debt. And then when you pay off your debt, you're needing the cash. You're using the debt all over again to pay your expenses. If you're having like any cash drama in your business, I'm not going to say, let's pay off all the debt. I'm going to say, let's make sure that we have adequate cash on hand. Let's make sure that we're able to pay expenses, pay you, And then once we get to where we need to be, then we can get aggressive. So it might be paying the minimum balance, if not a little bit over the minimum balance, so that you're not negatively impacted by the interest, right? And then once we get your cash on hand where it needs to be, or saving 10K, then we can say, okay, anything excess of that can be used for paying off debt. And a trick that I like to do is, if you want to pay or get a little aggressive, do it in halves. Say you want to pay your debt an extra $500. To make sure that you don't need that in the future, split it. $250 in savings, $250 for the debt. That way, if anything happens, you have savings piling up for you so that you don't need it. And another thing that I see is like you're missing that money if you're kind of transferring it back and forth. So doing it incrementally and strategically will help you not miss the money once it's gone, as well as paying off your debt where it needs to be. So improving your profit, 1, helps your cash on hand, and then 2, fixes or pays off your debt aggressively because you already have the cash on hand that you need. And so one of our clients, she was struggling with her debt. She wanted to make sure that she had cash on hand to pay herself, her expenses, and manage her debt. So what we did was, instead of just kind of overthinking everything, I'm like, let's just kind of spill this data out on the cash flow planner so that we know exactly how to predict how to pay off her payment processor loan. So with this calculation, I was able to calculate the exact week that she would be able to pay this off, and then how it would positively impact her cash on hand afterwards. And that leads me to the next profit focus is paying yourself more in your business. So remember when I said that we get an idea of what your take-home pay should be? Your business may not be in a place to immediately pay your ideal take-home pay, but we'll work on that. So remember when I told y'all, well, you might not remember, this might be the first episode with me, but in episodes 2 and 3, I talked about like the habits of a CEO with healthy cash flow is that they pay themselves well, consistently, and that helps them better improve their businesses because they're actually not resenting their business since they're paying themselves well. So with our clients during a legacy meeting, if we're unpacking their personal spending plan, if they're not able to just yet pay themselves their ideal take-home pay, we might go from 50% take-home pay, maybe 60, 65. These are all objective because what we'll do is just say, okay, how can we reduce your personal overhead now that we have an idea of what you typically spend? And what I like them to go, like after we create that personal spending plan, they will use different softwares that will automate their personal finances so that we can have touch points. So we're not doing personal bookkeeping. I did that before. It was cute, but we're not doing that anymore. We're gonna get you on a automated system like Quicken Simply. I really love that. I use it for myself, and it's a way to automate my personal finances. I can look at my net worth, I can look at my income, look at my spending, and make budgets based off of what I need and what I want. So we're going to use a system like that, or Rocket Money, so that you have guidelines for your personal while we work on a deep dive of your business finances. So once we do your spending plan, in 2 weeks, we'll do your cash flow call, and I'll map out your entire year for cash on hand based off of your recurring revenue in your business, your expenses, what you pay yourself. And then on the personal side, it'll be your take-home pay, your net pay for your take-home pay, your typical expenses that we mapped out in your personal spending plan, to kind of give you an idea of how your cash will look in both your business and personal. So as you're paying yourself more, you can do the same thing, right? You can do the same thing of making sure you have adequate cash on hand in your personal, making sure that you're obliterating your debt because now you're not living off of all of your take-home pay. And then it gets into the next profit focus, which is focus number 4, and that is getting serious about retirement. So as a fellow human, I want you to stop avoiding your future, especially if you're an entrepreneur. So getting started, even if it's just a little bit. So I do want to have a caveat with these different profit focuses. You don't have to wait till one gets to an ideal place to do the other. It's more so of like focus versus starting. So even when we first start, you can contribute a little bit to your retirement. You can contribute a little bit to your Roth, right? When we start focusing on it, then we're like, okay, let's maximize those things. So, this could mean like if you don't have a Roth IRA, opening a Roth IRA. This could be like a backdoor Roth if your income is over $161,000. in the year 2024 or whatever that limit is for the year. This can be leveraging your HSA. This can be opening a retirement account in your business, whether it's a SEP IRA, 401k, simple IRA. But I won't get into those details in this episode, and I'm not going to tell you like what you need to do. But that's an idea of getting serious about retirement is opening those different accounts for you, especially if you have an S corp in your company and you are an employee of your company. You want to consider the future, right? So you might not want to open a 401k for your business based off of your business model. So for me, I want to think of like if I were to have an employee, I don't have one at the moment. I did have some before. I did restructure and now I have contractors. But if I were to ever evolve back into having an employee, the retirement account that I have needs to work for every future employee. So keeping that in mind versus just opening whatever retirement account that you want or desire. That's going to be important. And then once we get to this focus, we're able to maximize your contribution so that you can, one, take care of your future self and then also have that tax benefit in the now. The fifth and final profit focus is becoming an investor. Becoming an investor. So now that we've touched on all the profit focuses, it's time to do something with that excess cash on hand, right? To increase your wealth. So focusing on being an investor in your own business looks like the self-directed route. That can be becoming an angel investor in small businesses so that they can have capital to get started. That can be helping a new business get started or acquiring a business that's similar to yours, purchasing that business, and then being able to make money off of the residuals or the future profits of said business. And that could also be real estate investing, like commercial real estate investing. So say, for instance, you're buying property and it's complementary for your business because maybe you have events and it works for you. Another way is you can rent out that event space or rental space so that you can have cash flow coming in and then you can have that investment. Or the excess cash that you have, instead of doing a self-directed route on the business side, you can do that in your personal. You can put money into your investment accounts because you do have that excess cash. And when you're working with a CFO, you're able to have someone like what we do with our clients. We look at stock basis. So say, for instance, stock basis is making sure that you're not paying over a certain amount where you get tax on capital gains because you're an S corp. I do talk about this a lot in my email series, so it'll be a shameless plug. Go join the Soft Life Sundays where I teach you how to improve your profit, improve your revenue, and pay yourself well in your business. So now that we went through all of the profit focuses, think of each focus as a spout, right? And it might be like the faucet. You're turning it on. It might be like a little bit turned on, or like heavy turned on, right? With all the pressure. They can be on at once, at full speed, at low speed, whatever works for your business, wherever works for where you are in life, right? But I like to have it in mind. So it's like, okay, what focus are we on in this quarter? What focus are we on in this year? What focus can we how can we open the spout or make a little bit more pressure in this one spout so that we can get the ball rolling to get to more pressure in another? So thinking of having those faucets come down, right? It's simultaneous, right? And it's beautifully done. So you might be thinking after this episode, I need way more profit to have healthy cash flow. But during the profit planning intensive with our clients, we work with your current cash flow. We're not trying to promise overnight that you're going to go from 1,000 to 15,000 cash on hand, right? It's more of a gradual fix, which is why I like to kind of think of the profit focus and kind of increase things and have the baseline and kind of do things for your business. And it's incremental growth, right? And we want to have it to your own ideals, not what everyone says or things of that nature. You might think it might take a while for your goals to be accomplished or your profit focuses to be in order. And it depends on what you think of a while, right? Because you're not looking at it or focusing on it, it might take long when you actually focus on it, where it might not. Because you need to start with getting the baseline first and knowing how you need to grow and go in your business to reach your success based on your terms. Hey there, let me know in the comments below what's your biggest aha moment when it comes to cash flow or how cash flows in your business. How will you look at your cash differently moving forward? If you're ready to learn how to increase your profit in your business and manage your cash better, join my weekly series, Soft Life Sundays. I want you to avoid living paycheck to paycheck, better yet, stripe payout to stripe payout. You need visibility in your personal funds so that you can pay yourself well. The Soft Life Sunday series will give you tips to uncover what you need to pay yourself to avoid living on 100% of your take home pay so that you can stop surviving and thrive, save, and invest personally to hit your legacy goals. Go to lovelyfinancials.com/Sunday to get started. If you're a woman growing your business and family and want to have your business build personal wealth and legacy, subscribe to either YouTube or wherever you listen to your favorite podcasts. I'm on a mission to help 100 women reach at least 1 million in net worth to create generational wealth and break generational curses. If this aligns with you, I'd love to have you be a part of the community, so stay tuned for more episodes on Harmonious Wealth. Hey there, girlfriend. If you're ready to finally have the lifestyle and legacy to show for your business success, I would love for you to click that subscribe button on your favorite podcast app or YouTube.